Hello, good afternoon, everyone. We welcome you to the Opportunity Day for TPAC for full year FY23 and Q4 23. It's been a pleasure to have you guys here today on this Opportunity Day for TPAC. As a part of our next few minutes, we will take you through our quick presentation for around 15 minutes and then reserve the balance time for any Q&A that you may have for our company. Go ahead, please. Yeah, as many of you would be aware, TPAC is a specialty packaging solution provider with almost more than 90% of our portfolio coming from the food and pharma segment, which requires a very high degree of hygiene and clean room kind of an environment and very, very strict qualifications. And this is one of the reasons that it translates into one of the best in class gross margins that we have amongst the packaging companies. Our presence is by and large into the emerging geographies, where from those geographies we are serving close to around 50 countries to around 1,500 customers across the globe. Most of our products today are made up of PET, PP, and PP, which is 100% monomaterial format with proven mechanical recyclability. One of the unique things of our business is that anything and everything that comes out of our portfolio is actually very customized and made through a design lab, tailored to the requirements of our customers for their aesthetics, for their design, and for their sustainability requirement. Go ahead. Next slide. As many of you are aware, this company has had a legacy of almost 30 years. So it's a legacy which has been built on a very, very strong foundation of the erstwhile founders who built this business. But in 2016, a new ownership came into being. And since then, there has been a radical transformation in the company. The new sponsors and the management basically instilled a new life into the company, and the company went on into a trajectory of accelerated growth, going forward into new geographies, new territories, and with a vision to become Asia's most respected packaging company and building a globally sustainable business. Go ahead. One of the first things that the new owners and the new management did was to carefully craft strategic choices, and for the first 2 years were spent diligently in choosing these important attributes of the company which will define the future of TPAC. As you can see, we have spoken about these 6 attributes or 6 strategic choices that the company took way back in 2016 and 18, which has defined who we are today, which is Asia's fastest growing packaging company. Go ahead. Once those choices were taken in the first 2 years, then it was all about rigorous execution. The last 5 years has been about diligently and in a very methodical fashion executing these choices, and which has led to our international presence and scale building up in TPAC. Go ahead. And what led us there, and with these choices and this execution, today we are a company which has almost scaled 5x of what we were when the leadership changed way back in 2016. We have taken our presence from 3 plants to 17 plants in 5 geographies. We have expanded outside the shores of Thailand into India, Malaysia, UAE, Philippines, all emerging geographies. And not just expansion into geographies, we have also managed to triple our talent base from 900 to 3,000, which includes people from almost 10 nationalities. Other than growth, we have also placed very high emphasis on the corporate governance. And one of the important marquee events for in the history of TPAC also has been to move from MAI to SET, which also happened in the last few years. Go ahead. This slide just summarizes who we are today. Many of you would have seen this. I won't take much time in re-emphasizing, but it is important to remind that TPAC is a very specialized packaging company with high degree of focus on food and pharmaceutical segments, and with a history of serving some long-standing blue chip customers where our relationship have been more than multi-decades. And all of this we are today serving from our 5 centers in emerging geographies. And these 5 geographies with 17 plants today combined are serving 50 countries to our clients across the globe. Go ahead. I think in terms of our growth strategy, it is important to note that our growth strategy will continue to be a juxtaposition of organic and inorganic investments. Our philosophy on the organic side is very clear. For every geography where we are by far the leaders in the segment where we are present. But our endeavor will always be to grow at least one of that particular market. And that is something which we have achieved, and that is something which we will aspire for all our management locally to undertake organically. Beyond organic growth, we continue to remain also excited by the numerous M&A opportunities that we see. The next decade is going to be all around a lot of family-owned businesses coming over, where we can the family businesses coming for potential sale, and we believe that TPAC can be one of the best partners to acquire them and integrate them into the family. And if the history has to speak for itself, we have been the preferred choice for most of these family-owned companies because of what we bring to the table for these partners. And this is going to be an integral part of our growth. We remain very, very comfortable on our balance sheet today, which has a debt to equity of 1:1, to be able to take those inorganic bets in the coming quarters and coming years. And as we speak, we already are continuing to have some good amount of conversations and discussion with potential companies. And we hope and wish that we are able to come to you soon with some announcements also on this front. Go forward. I think giving you an overview about the company, we would like to now give you some good positive developments that happened on our business in the last quarter, or rather also in the last year. Starting with that, I would want to talk about our presence in India, right? So we have been able to significantly enhance our infrastructure and our capacities in one of the most promising geographies for TPAC, which is India. Many of you are aware we had initiated the building of 2 new plants in India, which got commenced and are now operating fully in our one in the west and one in the north of India. We also complemented it with 2 high capacity European machines that we brought towards the end of 2023, which have added almost close to around 10% to the overall India capacity. And a lot of operational excellence initiatives also embarked upon. One which was about consolidation of our 2 plants in western region, which thereby enhancing efficiency and capacity at one single location. All of this makes us feel very, very convinced and very confident of how we will be able to scale up our India business now, which is fully ready from an infrastructure, from a management standpoint. Go ahead. Not just India, we would equally like to talk about our acquisition that we did in south of India, which is Kaipet. This was an acquisition, as many of you would remember, we had done in early part of 2022 with the objective of essentially gaining more deeper south presence in India where we did not have a manufacturing location. What's interesting to note is that in a matter of now 2 years, we have significantly enhanced their capacity through certain strategic infrastructure enhancements, including remodeling their entire warehouse location into a production floor, also streamlining a lot of their operations through automation, thereby reducing cost, and also bringing a huge amount of procurement synergies. All of these have translated today into a 60% growth in the EBITDA since the last time we did the acquisition of this company. As you can imagine, these are the kind of synergies we draw into our acquisitions, which makes us feel very confident of being able to derive value out of our M&As. Go ahead. This is something we are very, very excited about. This is the first time ever that we have actually put up a greenfield operation in such an ultra hygiene clean room kind of an environment. What you see here is a 10,000 clean room, class 10,000 clean room area for packaging, which is the first ever in the history of TPAC. And this is being done because this facility for customs is something that we have commenced to make high value add caps and closures to serve the pharma and the medical field and medical applications with very, very nuanced kind of products. This, if few of you would remember, last year we had initiated it as a greenfield operation into a new company, which also gives us a certain tax benefits. And we are now happy to announce that we have already started the production. We have commenced the operations. The revenue flow will start from Q1 of 2024. And some of the audits have already happened from best-in-class global pharma companies, which we have successfully passed through. And today we believe this project of ours will become a very strong foundation of growth in times to come. We are already starting to see a good project pipeline from a lot of pharma and food customers, and you will see the ramp up happening in every quarter on quarter as far as this custom solution business of ours is concerned. This is one of the important drivers that we see for growth in India, other than the natural growth that we are seeing for our core business. Go ahead, please. During the year, we also made our first ever greenfield entry into a completely new alien geography, which is Philippines. We feel very proud of our management team. We feel very proud of our teams to be able to complete this project from concept to conceptualization to final completion in a record period of 10 months. To the extent that the customer or behind which we had put up this project, which is a leading dairy manufacturer in Malaysia, their chairman also came in recently and were very complimentary of our efforts and our diligence in completing this particular project. We are excited by the fact that we have now, with this project, entered into one of the fast growing ASEAN markets, which is Philippines. Our production setup will be ready by the end of this month, and we should expect hopefully a commercial production by April. This is tied into the customer, our anchor customer's plan also, which is next door to us. It is important to note that we are 100% exclusive supplier to this customer, and they have a history and they have a record of being one of the most exciting IPOs on the Malaysian market. So we feel very confident that they will be able to deepen their presence, to gain their presence in Philippine market, and we will be able to grow with this customer also in parallel. Not just this customer, now that we have our operations and our getting ready, we also have started to see some customer inquiries coming from some global MNCs, which we feel very happy about. And we, over the years, we believe Philippines is also going to become one of the strong foundation of TPAC growth in the ASEAN geography. I would like to also emphasize that we could manage to secure an approval from Board of Investment for certain incentives in that geography. And what makes us feel very proud about this fact is that it is the first time a packaging company is getting such incentives. And this has been only because of the testimony of our strong technology and engineering that we are bringing, and we could demonstrate to the local authorities in Philippines. Go ahead. I think one important change that happened for us in 2023 is also the brand enhancement that we did for TPAC brand through very active participations in exhibitions and seminars. Over the year, we almost took part in 5 such exhibitions. And what's very encouraging for us is that this has started to reap in some solid results for our investment, which has translated into active customer inquiries and now new projects also in the pipeline. So we feel confident this is the right step for us as a group, and you will be seeing more and more of us in such geographies across the globe. Go ahead. We have spoken about our digitalization initiatives in past, enhancing our customer experience journey. We also are going to be rolling out our global CRM this year across the geographies, and this is a very important initiative for us when it comes to serving the customers. Konkanit, please unmute, please. Yeah. And then also, other than this, we are also very keen to homogenize our ERP, which is not the case today for all the entities in TPAC Group. So we are at early stages of evaluating a global best-in-class software for such ERP transformation also. And we'll keep you updated as it gets progressed over the next few quarters. Go ahead. I guess this is an example of how TPAC pushes its limits to basically when it comes to embracing renewable energy, when it comes to reduction in carbon footprint. What you see here is our Malaysia factory. As you can see, we stretched beyond limits to even put solar rooftops on our car parking and certain auxiliary buildings at our Malaysia factory. And all of these initiatives together has now accounted for almost 10% reduction in our energy requirements, or rather being met by the renewable sources. So other than furthering our sustainability clause, it is also going a long way in reducing our energy cost in a high inflationary environment. And you will see more and more such initiatives that we will be doing across our other geographies. Go ahead. Yeah, this is what I was talking about of how the roadmap will pan. So our objective is, our aim is to power almost 100% of our plants with renewable energy by 2025, unless and until there are restrictions which are structural based or regulatory based. We are also focused on coming out with our first ever sustainability report and also target inclusion in the THSI index in the coming year. Go ahead. And not just sustainability, equal focus on transparency and accountability. To that extent, we recently got a sustainability committee structure formed and approved by our board, which is led by an independent chairman and independent board member. And this is all to bring more dedicated focus towards our sustainability clause. We also have now a CSC declaration in place, which also goes a long way in in advancing our transparency and accountability and compliance initiatives. Go ahead, please. So this was all about the business highlights. On the financial front, let me quickly recap it for you guys, and then we'll open it up for Q&A. So as you can see, another strong year in 2023 of growth, both on top line and on the bottom line, and which has translated into a 5-year CAGR, EBITDA CAGR of 32%, which basically helps us retain the title of the Asia's fastest growing packaging company. Go ahead. Go ahead. As you can see, this year, go back. As you can see, this year, the highlights being our EPS almost jumped by 50% from 1 Thai baht to 1.51. Our ROE at 20% remains very strong in terms of the return on the return ratios for our balance sheet. And even from our balance sheet room perspective, we could manage to lower it down from 1.16 at the start of the year to 1.06x, which against a very, very strong capex intensity that we had undertaken in 2023. So this also makes us feel very confident of how we can now leverage our balance sheet for future growth. Point to note here is that all this growth happened with intensified capital investment, and yet we could keep our debt equity, or rather we bring down our debt equity from earlier levels to at the end of to what it is at the end of 2023. Go down. Q4 specifically, it moderated for us because we almost had 2 record quarters behind that. It's as much as you would want, it's not practically at all times possible to be able to grow quarter on quarter. So Q3 was the record highest quarter in the history of TPAC. Against that, TPAC profitability moderated a little, and there were a couple of reasons for it, which one also was on account of some bit of a volume compression because of some unseasonal sales that affected us, and bit of a margin compression because of the overall business and product mix. Yet we did not stop our investments, both on the balance sheet and both also on the P&L side for our new ventures, whether it is customs and Philippines, which we believe are going to become solid pillars of growth in times to come. Go ahead. This is something that we wanted to just clarify because we saw certain queries coming in after our results declaration in Q4 around why the selling expenses really shot up from 59 million Thai baht in Q3 to 93 in Q4, and we wanted to just clarify this to you guys that this is more because of a reclassification that happened, from around 30 million of Thai baht of expenses, freight expenses, which were getting clubbed in or netted in revenue, now getting shifted to the selling expenses. This accounting reclassification is EBITDA neutral. We want to highlight that there is no structural shift in the cost structure for TPAC between Q3 and Q4. Go ahead. This is again a very important sign of a very healthy cash conversion business. We are able to translate almost 85%, or rather 80 to 85% of our EBITDA into operating cash flow. And this has been our history consistently. And this allows us to further reinvest this cash back into the business for growth or to delever the balance sheet. Go ahead. As you can see, we in the last 2 years on 22 and 23, we have intensified our capex investments from what it was earlier at almost around 35% of our EBITDA, now stands at almost 45-50%. So the year of 22 and 23 was of high capex investments, large part of which was done in India, UAE, which today has now given us a very strong platform, both from an infrastructure, from capacity, from people, and which we believe is going to now we will leverage in the coming years with that level of platform ready for us. So this is a very positive sign for the business that a lot of investment has already gone organically into this. Yes, we will continue to invest further, but there is a lot for us to even uh, extract from these investments in the coming years, which you will see in times to come. Go ahead. I think I've already spoken about it. My balance sheet, even though with a lot of investments going in, we have been able to keep the debt equity in check, and now at 1x debt to equity, we feel very comfortable to, further deploy another 1.5 billion Thai baht into important strategic initiatives, M&As, and hopefully, we should be able to continue with our M&A, journey, which we have done in the coming, and you will see some of these actions translating in the coming quarters or year ahead. Go down. And just to summarize, management remains very optimistic on sustaining the growth momentum. We have done a lot of investments in the past 2 years and expect now a strong cash flow generation coming in the year. M&A will remain very important parameter of growth for us, and the new platforms that are created through Philippines and customs will also be quite will be accretive for the business in years to come. So I think with that, I would like to thank you for attending this commentary. We will be very happy to take over the questions. I have with me my colleagues also here, who can also help in translating any questions or any answers in Thai if required for. So yeah, so Ravi, can you help me with the questions? Yeah.
Okay, Mr. Usha, can you?
So yeah, I can hear the question now. So one of the questions that I see on the screen is, can we the reason for that drop essentially happened because we had an extension of the rainy season in this particular last year, which was very, very non-peculiar to that extent. And because of that extension of unseasonal rains coming in, the demand for the food and FMCG products reduced. It affected the entire industry as such. This is not a common phenomena. And as we get into Q1 of 2024, we are definitely expecting and seeing a recovery. So you should definitely see the growth getting translated in the coming quarter. How much revenue did the two new greenfield generate in 2023? So it's going to be difficult for us to give you a plant-wise revenue generation, but what I can tell you is now these two new greenfields, which were created next to our existing plants, are now getting utilized close to around 65-70%. There is room for us to further add capacity in the infrastructure that is created, and that is something which we will be also doing to further add more capacity, because in our business we do modular capacity addition, which can be done to further grow the business. The The other question that I have here is, which says that.
So Vishal, shall I speak? Basically,
Please.
we're presenting the questions. So the next point is in terms of how much did TPAC grow volume in 2023 by country. For India specifically, can TPAC India volume growth keeps up with the India GDP growth at 8% historically and going forward?
Yes, absolutely. And as I said, from directionally our growth targets will definitely be more than 1.5x of the growth of that particular industry. While India GDP growth definitely makes us feel very excited about the Indian economy. And that is also the reason, you see a lot of interest in the packaging sector for India geography. Last year, specifically, our segment got hit from the demand side and did not grow at the rate of what the GDP grew. And that is the reason for the hit we had for Q2 and Q3 also for our India business. But yes, the short answer to your question, definitely, all our plans are on double-digit growth that we plan for these geographies.
The next question is that it seems like TPAC is performing great in every country except India. Is this an industry-wide challenge for every Indian packaging company? How do you see this demand recovering in the past 2-3 months? How much did TPAC grow its volume approximately?
I think we have already answered that question for India. As I said, the last year was not normal. We had unseasonal rains really affecting the entire industry, and that is something that we do not expect. We have already started this year with a good momentum for India market.
The next question is around, I think, selling expenses. So we can ignore that one because given that we have already answered that, but it has just been more of a reclassification. Pick it up, 0.4. Can you go down? Then the next point is raw material prices increased sharply during Q3 23 and then normalized during Q4 23. If I understand the pass-through mechanism correctly, gross profit margin in Q1 25, Q1 24 should be at least better than 4 quarters of last year or 9 months level of last year. Yeah, so I think just to answer that, there has been a fluctuation in the resin prices, and as you rightly pointed out, we see that the resin prices have normalized, and even in terms of your gross margin stabilization, we do not believe there to be a lot of fluctuation on account of resin prices going forward. The next question again is on selling expenses. So we have already answered that in the question.
Yeah, so around 30 million of that is what is getting reclassified, which we already addressed that into the presentation. Yeah.
The next question is around M&A market, whether it is attractive today given high valuation multiple, especially in India market. I see TPAC hasn't engaged in any M&A since last year.
Yeah, so I think this is important because many of you are keenly following, the TPAC's M&A activity. So what I can tell you is, while we may not have closed any acquisitions, we are very, very actively in discussions and continue to scout the right targets. Wherever we pay a reasonable value for the business. We will never overpay, and we are also not somebody who goes and buys things at distress. So for now, any acquisition that we will do it, with the right reasonable value for our business, and yes, and hopefully you should see and hear us soon coming out with something. But till that time, it's difficult. It's not possible for me to give and do any speculations.
So sorry, Vishal, we will just have to run a little fast because we have a couple of questions and less time. The next point is with respect to the earlier aspiration plan which we had given in 2021, wherein we had earlier focused to double our EBITDA to 1.7 billion. However, we have been able to achieve 1.3 billion.
Yeah, that's true. That's true, and that's because we had factored in that particular plan, a certain acquisition that we will be doing, which is not what we have done today. And as you all know, the environment, as far as the inflationary environment had come through, the cost of the capital had also gone up, and we became more and more conservative in terms of our thresholds on how much we want to invest before we actually, or the acquisition criteria become more stringent for us. But in respect of that, now we have a much more leaner balance sheet, which we can now use to further accelerate our EBITDA targets.
The next question is in respect to utilization rates. What is the expected utilization rate in FY24 versus FY23?
So I guess, in past, by and large, I can tell you we have operated at around 75-80% for our India and UAE business, and close to around 60 to 65% for our Thailand and Malaysia business. We have done recently, towards the end of the year in India, a lot of capacity addition for India, which has still not been utilized yet. So our endeavor will be to bring back that utilization for increased capacity, which will drive the volume growth for our India and UAE business. So a lot of those investment that we have done, and as far as Malaysia and Thailand is concerned, we will continue to maintain the same growth momentum, and which was quite good, by the way, for our 2023.
The next question is on CAPEX. So the question is that reduce CAPEX in FY24. Is it in respect to saving cash for future acquisitions?
I mean, it's a good position to be in, right? I mean, reduced CAPEX is because we believe that a lot of these investments should now start to give us the desired result. We are a very, very aggressive growth-centered company. So if tomorrow we see further more opportunities for investments organically or even inorganically, we will definitely not shy from taking those. But yes, I think, it's a good position to have done a good investment cycle in the last 2 years, have a comfortable balance sheet position, a business generating cash flows, which can then be used to take more, I would say, bets for inorganic activity. But we will definitely be very rational in all our investments that we do going forward.
We shall last 4 minutes and we still have some questions.
Yeah.
The next one is in terms of anticipated plan to increase stock liquidity, whether that is still in place.
No, we continue to look at potential ways to do that. I mean, we are also looking at to marry it with any corporate event instead of where we raise certain capital to fund growth. But definitely, what we can assure our investors is we are seeking the right instrument and right way to bring that liquidity into the stock, and that is something which is on top of our mind. You should see some action, but it will be linked to a bigger growth plan that we will want to bring into picture.
The next one is in terms of the actual net profit margin in FY23. Is it sustainable or one time?
No, I think none of our margins today are a one-time tailwind, right? I mean, this is structurally our margin structure. I mean, I would talk about, you see our margin structures over a period of time. We have been a company which has been at around 19 to 20% EBITDA margin business, and that is what we will aim to keep the business at.
The next one is core EBITDA trend in FY24.
So it's I don't think so as a company we give any forward guidance for our EBITDA or revenue. I think, but if you have to think about what it will be in future, I would encourage you to see back on how it has been in past. And that is what we will want to continue to maintain as a growth momentum. We will not take our decisions by quarter. We will take it in the interest of a long-term growth, which is what we have done always.
When is the new aspiration plan? Is it still on?
Yeah, I mean, we are working over it. I mean, we want to make sure that once we come to you guys, it's very detailed. It's very clear and truly aspirational. And to that extent, you know, in this entire business complexities, we want to make sure that we have the desired plans from each one of the geographies before we can come back to you. But we will keep you appraised on as soon as we have something concrete and truly aspirational to share with you.
Yeah, then the questions are around Philippines. So I'm just, given that we just have a minute left, I'm just taking the bigger questions. The first one is in terms of Philippines, that what will be the expected utilization rate going forward in this year?
So
And what is the
Philippines
expected
is just a
revenue?
manufacturing startup for us at this stage. We have set up a capacity which can tailor to the requirements of our customer even in the coming years. At the initial start, we expect that could be just 20-25%, which is good because we want to be ready with our capacity as the growth happens. So this is what we have as we in the current situation. But with every passing day, new inquiries are coming, and we will always want to be ready with capacity ahead of any opportunity to not disappoint our customers.
Yeah. So I think, Vishal, we have covered mostly all the key questions. We just have 10 seconds left now.
No, so I think with this, I want to thank you so much. I apologize for some of my Thai colleagues if we were not able to communicate to you in Thai, and we should have. We will make sure that going forward in the next opportunity day, you have a Thai commentary, for easy communication and reference. Thank you so much for joining us today. We really appreciate your continued interest. Swadika.